All right, good day. Hope that you're doing well. So in this question, we're going to be focusing on an income statement from your previous question paper. Now, remember in the previous video, I was doing accounting equations as well as matching columns with regards to your GAAP principle, right? So now in this question, our main focus is going to be on the income statement. Now here, we are given draft distributors and their year end is on 28th February 19. So we need to prepare this income statement in accordance to this information we are given. So this is just the first information whereby I'm given my list of balances. So starting off with my sales, right? So always on your sales, remember you need to subtract your debtors allowances. So first I'm going to start off with the sales amount that I'm given. What is my sales amount that I'm given on this information? So let me highlight my sales. So this is my sales. And this is the amount I'm given, 875,000. So the sales amount that I'm given is 8. And now let me see if I had any debtors allowances, right? So here on this information, my debtors allowances, let me check. So these are my debtors allowances that I'm given and they amount to 13,000. Remember, you need to always subtract your our debtors allowances. And now punching this into my calculator, 875,000 minus 13,000, this would be equals to 862,000. Now, my cost of sales, let me see the amount that I'm given as my cost of sales. So my cost of sales in this instance is equals to 400,000. So I'm just going to put it in brackets. And now remember, your sales subtracted to your cost of sales, they're going to give you your gross profit. So your cost of sales, always make sure it's in bracket. So 862,000 minus 400,000, you're going to get a gross profit of 462,000. Now, when it comes to your other operating income, before you can start with the incomes that you are given, first you need to recognize these two. They are there. So first you're going to start with your trading stock, right? First you're going to check for your trading stock and then your provision for bad debt. This is if they are there. Now, these two accounts, right? So let me start with your trading stock. With regards to your trading stock, it's either you can have a surplus, which is extra trading stock, or you could have a deficit, a shortfall, right? Now, if your trading stock is a surplus, you're going to recognize this surplus as an income. Now, if your trading stock is a deficit, this deficit here, you're going to classify it as an expense. So before you classify your given incomes, right? So try by classifying whether your trading stock is it a surplus or is it a deficit. If it's a surplus, you're going to recognize it as an income. If it's a deficit, you're going to recognize it as an expense. Now, what is provision for bad debts? Provision for bad debts is that money you set aside in case some of your debtors don't pay you. So there are two scenarios. It's either this amount, it could increase from last year, or it could decrease. Now, if your provision for bad debts increase from last year, remember, this is the money you set aside in case some of the people who owe you don't pay you. If it increases, do you think it's a good thing? No, right? Obviously, it won't be a good thing because now you're expecting more people not to pay you. So the increase in provision for bad debt, you should recognize it as an expense. And your decrease in provision for bad debts, meaning that now you're expecting less people not to pay you, you should recognize it as an income. Now, let me classify, let me start with my trading stock. Let me see if I have any transaction that affects my trading stock. So now, how do we find out that whether our trading stock is a surplus or is it a deficit? So you want to check your trading stock balance that you're given, and you're going to compare it to the trading stock balance. Now, this trading stock balance is from your physical stock count. So this is your trading stock balance from your physical stock count. Now, where would you find this trading stock balance from your physical stock count? You're going to find it from your additional information. What about this trading stock balance? You're going to find it on the list of balances you are given, basically this table right over here, right? So you're going to find it on the list of balances you are given. Now, let me classify, let me start with my trading stock balance from my list of balances. Now, this is my trading stock, which is 16,500 from my list of balances. And before I can compare it, so first let me also find my trading stock for my physical stock count. Now, Information D, they said physical stock count at the end of the year revealed the following on hand. So they told us that our trading stock on hand is 15,500. Now, before I can compare these two, let me see if there's any additional information that might affect my trading stock. And if there's any additional information that might affect my trading stock, I'm going to make the adjustment on this balance right over here. Right. So let me check for any additional information relating to trading stock. Now, here, Information C, they said the business made donation of stock. Now, if you donate stock, can you agree that this would affect our trading stock? Now, how much was the selling price of this stock? It was 1.4. A local crate before stock count. No entry was made. Now, remember, this adjustment that was not entered, we would make that adjustment on this balance right over here from the balance on our given list of balances. So now they're telling us that the selling price of this stock is 1.4. Now, every time whenever you are dealing with trading stock, right, you need to make sure that your prices are in terms of your cost price. Now, how would you find the cost price of this stock? Because you're given the selling price here, you would need to make use of your markup formula. Remember, your cost plus markup equals to your selling price. Now, cost is always 100%. Plus, let us see the markup that we are given here. So here we are told that the percentage markup used by RAV distributors is 75%, meaning that this is the percentage of profit they are making on every sale, 75%. So my markup is 75, meaning that my selling price would be 175. Now here, they're telling me that this stock has a selling price of 1.4. And remember, I'm looking for the cost. How would I find the cost? I'm going to multiply this by what I want, must always be at the top. What I have must always be at the bottom. What is it that I want here? On this formula here, I'm looking for my cost price, and my cost, remember, it's always 100%. I'm going to put the 100 here. What is this one? 1.4 that I have, right? This 1.4 that I have is the selling price, and the selling price in terms of percentages is 175. So I'm going to divide this by 175. So now, punching that into my calculator, I'm going to find my cost price to be equals to 800. So this is the cost price of this donated trading stock. So if my trading stock was donated, on my trading stock balance, am I going to add or subtract this 800 that I found? Obviously, I would need to subtract it because it's no longer there. So I'm going to subtract the 800 for the donated stock here, right? Now, 16,500 minus your 800, this would be equals to 15,700. From there, when and after, this is now when you can compare these two balances. And by the way, these donations of our trading stock, remember we donated trading stock with a cost of 800. So always when there is donation, find your cost price if they gave you the selling price, right? Always try to find your cost using this technique right over here. And now we subtracted the 800, we can now compare the two balances. And I'm saying that this donation of 800, you'd also recognize it as an expense on your income statement. Now, before I forget, I'm going to write this here. I'm going to say my donations, which must be always in cost price, donations, and this amount, I've calculated it as 800. Now, going back to this, remember with regards to trading stock, I need to classify whether do I have a deficit or do I have a surplus? So now comparing the two, in accordance to your books, you are supposed to have trading stock which is worth 15,700. But when you're doing the physical stock count, you actually find that your trading stock is actually worth 15,500. So in accordance to your books, you expect your trading stock to be 15,700. But when you're performing your physical stock count, your trading stock is 15,500. Now, would this be a deficit or a surplus? This would be a deficit. And why is that? You expected your trading stock to be more, which is 5,700, but then when you were counting it, it was less, which is 15,500. Now, the difference between the two, it will be our deficit. So to find our deficit, we're going to say 15,000. So 700 minus 15,500. As a result, our trading stock deficit would be equal to 200 rands. Now, let us check if we have any provision for bad debts here. So I'm going to first start on my list of, or on my table here. So scanning all these transactions on my table. I don't have any provision for bad debts. So let me also go to my additional information. Also checking my additional information. I don't have any transactions which relate to provision for bad debts. Right? Now remember, before you recognize your incomes as well as all your expenses, right? Before you do that, always check for these two, or always start with these two. Check your trading stock and check whether you have a surplus or you have a deficit. And by the way, this one would always be there, right? So check your trading stock, whether you have a surplus or deficit, and also check your provision for bad debts. After you've checked these two, from then now you can start recognizing those incomes and expenses you are given on your list of balances here, right? So now, how do you classify your trading stock, whether it's a surplus or deficit? This, remember, is the balance that we are given in our books. We need to compare it to the balance from our physical stock count. But before we do that, we need to take into consideration any additional information or any additional transaction which may affect our trading stock. In this case, it's our donations, which we didn't recognize, of 800. And because donations increase your trading stock, we subtracted them. Now, when we compare the two, in our books, we expected to have trading stock of 15,700, but then when we performed physical stock count, it was less. It was 15,500, meaning that we made a deficit of 200. Now, if there was any transaction that relates to your provision for bad debts, remember, if your provision for bad debts increased from last year, this would be an expense. And if they decrease from last year, this would be an income, right? So now I can start with recognizing all the incomes as well as the expenses that I'm given. So here, let me write down my trading stock deficit before I forget. So I have a trading stock. And remember, these calculations, you should do them on your answer sheet. Get your marks. I have a trading stock deficit. And how did I calculate it? I took 15,700 and I minus 15,500. And my deficit, it was 100. Now let me try and classify the incomes that I have here. So I have my rent income. Right? So I have my rent income. Now let me see, I have commission income. Now what other income do I have? I have discount received. So discount received should be classified as an income. This is the discount your creditors are giving you. What about discount allowed? Discount allowed, this is the discount that you as a business you are giving to your customers. So it's an expense. Now, also let me see any income that I might have here. So, on the additional, on this even, these are the only incomes I have. And also, remember, you also need to check on your additional information if you have any incomes, right? But then I'm going to start with those that I'm given here. So I have my commission income. I also have my rent income. Apart from my rent income, I have discount that I received. Now, let me write these amounts in brackets. So my discount received is 880, just in case I have any transactions. My commission income, it's 8.4. And my rent income that I'm given here is 37,100. Now, let me see in my additional information if I have any other income. So I can see already I have an adjustment relating to commission income. I'm going to highlight it. Let me see. The remaining one, which was left for this line item, it was my bad debts recovered. So I'm going to write it here as bad debts. Bad debts covered. Now that I've classified all my incomes that I need, let me go to my adjustments and try to see if I need to add or subtract on those incomes. So commission of 4,000 has not yet been received by the business. So this simply means that we didn't receive this 4,000, and as a result, we need to add it on our incomes, right? Because we didn't receive it. So I'm going to add the 4,000 on my commission income. So commission income, I need to add 4,000. And if I do so, 8.4 plus 4,000, this would be equals to 12,400. Now, let me look for any transaction that may affect my rent income, right? So rent, let me see. But always, I know that always an adjustment for rent, it would always be there, right? Always just know that expect to have an adjustment relating to rent. So as you could see here, I have it. So always it would always be there. Now remember, first, when I have a rent transaction, I need to identify my financial year. It ends on 2019, 28 February, meaning that it starts on 1 March 2018 and it's going to end on 28 February 2019. So this is a total of 12 months. This is the first thing I classify, my financial period. Now, they're telling me that, okay, the rent increased by 400 per month from 1 November 2018. Now, rent for March was received and deposited. Now, remember, my year end is up until 28 February, meaning that March is the next financial year. So if I receive rent for March, would I need to add that rent or would I need to subtract it? I need to subtract it from my rent income because that rent is for next year, right? Not this year. So first I'm going to write down my timeline. So, right. So I'm going to classify all my months so here I'm going to represent all these months that I received rent for, right? So it's going to start from March. So this is going to be April, May, July, August, September, October, November, December, then Feb. And remember, they said I received I received my rent up until March. So the other month, March. And I need to subtract the rent for March. And why is that? It's because my financial year, it ends on February. So this is where my financial year ends, on February. I can only receive income up until Feb, right? So first you draw your timeline. And now let us calculate the amount of rent that we need to subtract. So here they're telling us that the rent for March, it was received, and also the rent increased by 400 per month from 1 November 2018. So this is my November. And at this point, they're telling me that rent from 1 November, it increased by 400. Now, I need to calculate the rent for March. How would I go about doing that? So first, right, I would need to recognize, so step one, find your total increase. Also, let me look at the rent amount that I'm given. So my rent income is 37,100. So I'm just going to write it there at the top, 37,100. Okay. So I'm just going to write it there. But then for now, we are not going to make use of it. Now we need to find our total increase. How would we find that? So we know that the rent increased by 400 from 1 November. I'm going to say 400. Now, for how many months did we receive this 400? We received it for November, December, January, Feb, as well as March. We need to include it because we received rent up until March. So this is total of 1, 2, 3, 4, 5. So we received this 400 for 5 months. So saying 400 multiplied by 5, this is equals to 2,000. Now, what would you do with this total increase? Which is step 2. You need to subtract your total increase from your rent amount that you're given. So you need to subtract this total increase from your rent amount. Now remember the rent amount that I'm given, it was this 37,100, right? So here I'm going to say, right, 37,100 subtract my total increase of 2,000, right? Okay, there I wrote 20,000. Let me just erase 1 0 because this is supposed to be 2,000, all right? So this 37,100 subtracted by my 2,000, and my total, it will be equals to 35,100. Now, what if my rent, it was decreased? So remember here, with regards to total increase, so your total increase, subtract it, your total decrease, you would have added it, right? So step 3, you're going to divide this amount, right? So you're going to divide it by total months you received rent for. You received rent for. And if you divide it by the total months you received for, what is it that you're going to get? You're going to get your rent per month, or it was increased. So always follow these steps because this transaction would always be there with regards to rent. So you need to divide this by the total months you receive rent for. And what is it that you're going to find when you do that? You're going to find your rent per month before it was increased. So 35,100. Now on my timeline, I'm going to count the number of months I received rent for. I received rent for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I received rent for 13 months. And now 35,100 divided by 13, the rent per month before it was increased, it was 2,700. Now, this is helpful. It means that the rent from this point up until this point, it was 2.7. Moving forward, it was increased by 400. Now, what is it that we're trying to calculate here? The rent for March. And on March, there was already an increase of 400, meaning that the rent for March, it would be the 2.7 plus the increase of 400. So as a result, our rent for March would be equals to 3,100. And remember, I said, what is it that I'm going to do with this rent for March? I'm going to subtract it because why? This is the rent for next year, not this year. So my rent income, subtract this by 3.1, which is the rent for March. And now, if I do so and I punch this into my calculator, my rent income would be equals to 34,000. Now, discount received. Let me see if I have any transaction which may affect my discount received here. So, okay, I don't have any information that affects my discount received. So I will just recognize the amount as 880. I'm going to close bracket this. I want to say this. Now let me calculate my bad debts that I recovered, right? So now the transaction which relates to my bad debt recovered is this transaction F. So now here they're telling us that an amount of 2,000 was received from BPEN, a debtor whose debt was written off as irrecoverable the previous year. Now, was credited to debtors control to the account of BPEN, correct the error. So now, what is it that they're telling us here? So this amount was received from BPEN, right? And this person was written off as irrecoverable in those previous years. Now, if a person was written off as irrecoverable and then he comes back and pays a certain amount, that amount we would need to recognize it as bad debts recovered. Because before we have written that person as a bad debt. Now, when they come back and pay the amount, we need to recognize them as bad debt recovered, right? And how much would this bad debt recovered be? It would be the 2,000 that we received from Big Ben. Now, as a result, my bad debts recovered, I'm going to write the amount here, which is the amount I received from BPEN, which is 2,000 rands. Right. And when I add my commission income of 12,400, my rent income of 13,400, my discount received of 880, as well as my bad debts recovered of 2,000, my operating income total should be equals to 49,280. My gross operating income, it will be how much in this case? So to find my gross operating income, right, I would need to add my gross profit with my other operating income. So basically, to find this amount, I would need to take 462,000 and add it to the 49,280. And if I do so, punching that into my calculator, my gross operating income should be equals to 511,280. Now, operating expenses. So these expenses that are in black, we were given the amounts for them, right, on the answer sheet. So the first one, which is our wages, we were given the amount is 20,300. So these were given on your answer sheet. I'm just going to write them as black. So the second amount for your salaries, it was given as 95,250. Water and electricity, it was given as 11,700. And lastly, your sundry expense, it was given as 3,500. So these are the amounts that are already there on your answer sheet. So remember, we recognize donations as well as trading stock deficit. Now, let us classify other expenses that we might have based on the information that we're given. So I'm going to first start with my given expenses and I'm going to write them down, right? So I'm going to go to my table where I'm given my list of balances. So my expenses, let me see, the wages I said are already given. So first is my discount allowed. This is the discount you give customers. And as a result, you need to classify it as an expense. I have insurance. I have bank charges. I have bad debts. I have telephone. I have my water and electricity. But then this one, as I've said, this amount is already given. So let me cancel out those ones that which I was given. My salaries, they give me the amount. My sundry expense, where is it? They give me the amount. I'm going to cancel it out. The last account, my stationery. Now, with regards to stationery, the stationery that you use the year, that one whereby you would classify it as an expense. So let me write down these. So I have discount allowed. And how much is the amount? My discount allowed, it's 800. What else do I have? Discount allowed. I have bank insurance and bank charges. I have insurance. Now my insurance amount, I'm given as 9,800. My bank charges, I'm given my bank charges. So these are my bank charges as 1,210. I have my bad debts, my telephone account. I have bad debts. I have my telephone account. Now, my telephone account, let me see how much is it? 12,506. And my bad debts, 0.3. Now, stationery, and remember I said with regards to stationery, I said this is the stationery that we use the year. So I'm going to write my stationery. And for the last line item, let me look here. What is it that I have? So also remember your depreciation, right? Depreciation is an expense, right? And every time whenever you have fixed asset, your fixed asset would always be there, meaning that depreciation would also always be an expense, right? Yeah, I would need to include depreciation. So depreciation would always be there, by the way. Either you're going to be given the amount or you're going to be required to calculate it. Now, remember, I said stationary, this is the stationary you used. We're going to try and determine that. Now, let me solve these line item by line item, starting off with my discount allowed, right? So let me see if I have any transaction that affects my discount allowed. Now, here I have a transaction which relates to my discount allowed, but then they didn't explicitly specify, right? So let us read this and see what do I mean by this. They said the February bank statement was received after the pre-adjustment while balance was drawn up. Now, the following must be adjusted. Now, dishonor check, this simply means that when a person gives us a check and maybe on that check is an error, when we try to get money, remember you would present that check to the bank and the bank would give you money in exchange of the check. But when we tried to give the bank the check, they declined the check because there was a mistake. This is a dishonor check. Now, they said this dishonor check of 2,000, this was in settlement of AD's account of 2040. So basically here, this person is owing us 2040. But we told him that he can settle his account, right? Meaning that in order for him not to owe us anymore, he could just pay us 2,000. Even though this was declined by the bank, this check, but for the mere fact that we offered him to pay 2,000 while he's paying 2040, right, or while he was supposed to pay 2040, this simply means that we gave him a discount of 40 rands, right? And as a result, that discount of 40 rands, we would need to classify it under discount allowed, right? So discount allowed, I'm going to add 40 rands, and as a result, this would be 840. Now, when it comes to accounting, everything that they tell you, you would need to do something about it. What do I mean by that? Every transaction, when they give you, right, it's either you're going to add or subtract on a certain line item. There wouldn't be, or 99% of the time, there wouldn't be those kind of transactions whereby you would just have to leave them and do nothing, right? Just like here, in this instance, one person may ask, okay, what am I supposed to do with amount? As you could see, this person was owing 2014, and then because of this settlement, meaning that you're closing this account, he needed to only pay 2,000. This simply means that we gave him a discount of 40 rand. So my total on my discount allowed to be the 840. Now, insurance, let me see if there's any transaction that relates to my insurance. Now, transaction H, which is below, the insurance amount includes annual premium of 1,160 paid on 1 July 2018. Now, let me draw up my timeline here. Remember, my financial year starts on the 1st of March 2018 and it ends on 1 Feb 2019. Now, to draw my timeline here, so 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is for all my months for this financial year, starting from March, July, August, September, December, Jan, Feb. Now, here they're telling me that, okay, this insurance premium, it's an annual amount, right? So this is an annual amount, meaning that this is for 12 months. Now, this was paid on 1 July 2018. Right? Now, on my timeline, 1 July 2018. So this is my 1 July 2018. And because it's an annual amount, meaning that that amount is for 12 months. For how many months did was I supposed to receive for this year? So it was July, August, September, October, November, December, January, Feb. So 1, 2, 3, 4, 5, 6, 7, 8. So for this financial year, it would only be applicable for 8 months. Remember, you can only pay your expenses up until your year end, right? And same applies with your income. You can only receive your income up until your year end, which is February. So if this insurance we started paying on July and it's an annual premium, right? Meaning that this premium is for 12 months. So it simply means that the 8 months it would be for this year, the 4 months it would be for next year. And because the 4 months it's for next year, we need to do what? We need to subtract it. Now, my insurance that I'm given here, this is 2,160. And because this is an annual amount, I'm going to divide this by 12. This would be equals to 180. This simply means that per month, our insurance will be paying for 180. And remember, I said, because for the 4 months or these 4 months, it's for next year, right? We need to subtract it. So I'm going to say 180 multiplied by 4, which is the insurance for next year. And this would be 720. So we need to subtract this insurance for next year or for the next 4 months, which relates to the next financial year. So here on my insurance, I'm going to subtract 720. And now punching this into my calculator, my insurance should be equals to 9,080. Now, bank charges, let me see if there's any transaction which relates to bank charges. Right? So here on information G, I'm told that my bank charges are equivalent to 183, right? And I didn't add these amounts. Oh, so I will need to add it now on my bank charges. So I'm going to add the 183. And now when I add the two amounts, my bank charges would total 1,393. Now, let me see if I have any information relating to my bad debts. So this is the information relating to bad debts. Here they say a debtor who owed 1.2 was declared insolvent. Now, this simply means that this person won't be able to pay us back this 1.2. But now, reading the information, it says a dividend of 4 cents to the rent was received and recorded, meaning that on this 1.2 that this person was owing us, we will only manage to receive 40 cents for every 1 rent. And if they didn't specify that this transaction was recorded, we would have recognized this as our bad debts recovered. But because it was recorded, we would need to leave it. What is it that we need to recognize? They say write off the remaining debt as irrecoverable. Now, if for every 1 rand we receive 40 cents, it simply means that 60 cents for every 1 rand would need to be recognized as bad debts, right? So 60 cents for every 1 rand on your 1.2, this is what we're going to recognize as our bad debts. So 0.60 multiplied by 1.2, this would be equals to 720. And this we're going to recognize it as irrecoverable or your bad debts. So on my bad debts amount, I'm going to add the 720. And now adding the two amount, my bad debt would be equal to 3,020. Now telephone, let me see if there's any transaction that affects my telephone. Now here I'm saying, okay, a telephone account for February 2019, which is the last month of the financial year, it was not recorded. So meaning that we didn't pay this one, or rather we didn't recognize this expense of 1,450. So we would need to add it on our telephone account. So this plus 1,450. Now as a result, my telephone account would be equals to 14,010. Now stationery used. So I am given my stationery balance here. My stationery balance, let me see how much is it. It's 10,800. So you just erase here. Now, the stationary balance that I was given, remember I said it is equals to 10,800. So my balance, stationary is 10,800. Now, they're telling me that, okay, physical stock count revealed the following, meaning that at the end of the year, the trading stock that was remaining, it was 460. Now, when I subtract this 460, which is the remaining trading stock, I'm going to get the trading stock that I in the year. And remember, this trading stock that you use, it will be the one that you would need to recognize it as an expense, not this balance here of 10,800. Now, 10,800 minus 460, this would give me a balance of 10,340. Now, this is the stationery that I used, right? And as a result, you would need to recognize it as an expense. Right? So this is 10,340. And how did we calculate it? Took the 10,800, which was the balance at the beginning, minus the balance at the end of 460 from the physical stock count. Now, this gave us the stationery that we use the year. Now, lastly, under our expenses, we need to recognize depreciation. Now, they're telling us that, okay, depreciation on equipment is calculated at 10% on the cost price, right? So first, they're telling me that depreciation is calculated at 10% on cost. Now, new equipment was bought on 1 September 2018. This transaction, it was not recorded. So there was new equipment, which cost 24,000, and it was bought on 1 September 2018. Now remember, your financial year starts from 1 March 2018 to 28 Feb 2019. This is your financial year. And now we need to calculate depreciation, right? So here, let me see if we have any other fixed assets besides equipment. So we have equipment, here is it. We don't have any vehicles. So remember, land and building doesn't depreciate. So simply means that the only fixed asset we have is its equipment, and we need to calculate its depreciation. Now remember, when you're calculating depreciation, you need to always use SUN method. So first, you're going to start by calculating depreciation for your sold, then your old or remaining fixed assets, and lastly, you're going to calculate the depreciation for your new. Now here on the information, they didn't tell us anything about equipment being sold, right? So automatically I know that, okay, with regards to my sold, there wasn't any equipment sold because they didn't specify, meaning that I will need to recognize depreciation for my old as well as my new. Now starting off with my old or remaining. On this side, I'm going to do my. Now, where would you get information relating to your old or remaining fixed asset? In this instance, your equipment. When I get it from the balances, remember here we're using the cost method. I want the cost of my remaining. So here on my balances that I'm given, my cost is equals to 140,000. Right, this is the cost. Now, most importantly, here they're telling us that depreciation, right? Here they say new equipment was bought for 24,000 and this transaction was recorded. What do they mean by this? This simply means that this 24,000, it was added on this cost. And as a result, we need to subtract it, right? Because here we're looking for only our old or remaining equipment. Now, if they said that this transaction was not recorded, then you would have used this 140,000. But because they explicitly mentioned that this transaction was recorded, right, you would need to subtract it because here you are not looking for the cost of both your new and old, you're just looking for the cost of your old, right? So always make sure that you be careful of this. Always look out for this, whether the transaction was recorded or not. So in this case, our cost 140,000 minus 24,000, it will be equals to 116,000. Now, remember, using this cost, we need to calculate our depreciation, which is at 10%. Now, always your old, it's there for 12 months. So I'm going to divide by 12 over 12. And now punching this into your calculator, your depreciation for your old, it should be equals to 11,100. Now, remember we had new equipment, and they're telling us that the cost of this new equipment is 24,000. So let me just change the color of my marker. I know that the cost of this new is 24,000. And now to calculate depreciation, I would take this cost multiplied by my depreciation percentage, which is 10. Now my new, for how many months was it present in the company? If I bought it on September, it was there from September, October, November, December, January, February, which is 6 months. I'm going to multiply this by 6 divided by 12. As a result, punching this into my calculator, my depreciation for my new equipment, it will be equals to 1,200. Now, to get my total depreciation for the year with regards to my equipment, because I only have my old equipment as well as my new, I'm going to add the depreciation for both of these. So I have 11,600, which is for my old. So here I have 11,600, which is for my old, plus the depreciation for my new, which I've calculated as 1.2. And now as a result, adding these two amounts, my depreciation for the year, it will be equals to 12,800. Now I'm done with all my expenses. So now I need to add all these expenses starting from 20,300, all these amounts going down. So starting here, going down, I need to add all of them, right? And if I do so, that total, I'm going to write it under my operating expenses balance. And this should be in brackets always, right? So now when I add all these expenses, they should be, when you add all these expenses, they should be equals to 183,223, right? Now, moving on to your operating profit, how would you go about calculating your operating profit? Your operating profit would be simply your gross operating income, right? Was 511.80, subtract your operating expense, hence we placed it in brackets, minus the 1,833. This would give you your operating profit. And in this case, your operating profit should be equals to 328,257. Now, after you've recognized your operating profit, the last two line items that you need to take into consideration are your interest income as well as your interest expense, right? So I'm going to write them here. So I have, I'm going to start with my interest income. And below, it will be my interest expense. And always this interest expense in brackets. Now, starting off with my interest income, let me see if I have any information which relates to my interest income, right? So on the given information, I don't have any information relating to interest income. But here I have interest on favorable balance, right, which is 480, right? So as a result, this would be my interest income, 480, my interest on favorable balance. And now to get my profit before interest expense, I would take this 328 and 57, add it to this 480, right? So this amount, to get it, you take the 328,057, and you're going to add it to your income of 480. Now, when you do, your profit before interest expense should be equals to 328,537. Now, what about your interest expense? Where would you get information? Interest expense. You're going to get your information relating to your interest expense on your loan, right? So here we have our loan. Interest on the loan from DEF Bank has not been entered yet. Interest is capitalized. Now, we need to calculate the interest expense, which is indicated with this question mark. Now, how would we go about doing that? So when you want to use this formula, right? When you take your balance at the beginning, right? So, okay, let me erase the other side. Balance at the beginning, right? You're gonna subtract your repayments, right? So it's in accordance to this table, by the way, balance minus your repayments plus your interest, and this would be equals to your balance at the end. You see that I'm using that table right over there. So all these variables are on the table. So what is our balance at the beginning? 270,000. How much is our repayments? 85,000. Interest, this is what I'm looking for. So I'm going to indicate it with a X. Now, all this is equals to our balance at the end, which is 235,000. Now, to calculate our interest, I'm just going to take the values to the other side, right? So this side I would be left with X, 235,000. So this is going to be a minus, taking it to the other side. So it will be minus 270,000. And this is going to be a positive if I take it to the other side. So this would be plus 85,000. And punching this into a calculator, you would get your interest expense for the year, right? So let me add that. And your interest, it should be equals to 50,000. Right? Now, this would be your interest expense, which you need to always subtract. So our interest expense is 50,000. Now, finally, to get our net profit for the year, right, we would need to take this 328,535, which is our profit before interest expense, right? 3,8,537, and we would need to subtract our interest expense of 50,000. Now, doing so, our net profit for the year, it will be equals to 278,537. Right. And this would be your complete income statement, right? Now, that'll be all for this video, right? So in the next question, we're going to be looking at your notes to your balance sheet as well as preparing the balance sheet. Remember to stay tuned.